Good morning, everybody. Letting audio turn on. Letting everybody join in. There's a few in the waiting room. Happy Sunday. It's good to see everybody. Good morning, Elizabeth. Good to see you. Great to have you. I believe I owe you an email, so be looking for something that has your links and some excuse me, access to resources. Good morning, Perry. Good morning, Stephen. Good to see you both. Got a great crew here today. Awesome. Thank you very much. I appreciate that. And again, glad to have you in the group. Elizabeth is fairly new, starting with us. All right. Welcome, everyone, to the Market Watch Group weekly market prep. Oh, I love Sundays. I love seeing you guys on Sundays. Well, the chimp is in his cage taking a nap. We don't have to worry about the chimp. It's calm. We can get work done, right? This is the best time for us to really assess what did we do last week, how did we do, what are we looking for this week, how are we going to accomplish it, what are we seeing in the market, any shifts, any confirmations. It's just nice to have that environment where we can really maintain that unbiased approach that allows us to see things more clearly and not get overwhelmed by any type of emotion that we tend to feel during risk sessions, market sessions. My name is Scott. Of course, I'll be your host. This is the weekly market prep. Here are the disclaimers, as always. And again, we just want to make sure that we're, very much emphasizing these, especially as we are launching the alerts. I didn't have anything that I told people. I'm not going to force them. My thought is 1 or 2 a week are probably going to come. Maybe we get to 3. There may be weeks we don't have any because I'm not going to force trades or I'm not going to put something that I'm like, this is questionable. So when I put the information out, but when that information gets put out, that's not my trade anymore. That's you thinking, oh yeah, you know what? Maybe it's validating what you already thought. Maybe it's giving you something you hadn't considered. But at whatever point you get it, it becomes yours. And that's now your trade to do with it as you see fit. One more in the waiting room. Okay, so very important to keep those in mind. Remember, the disclaimers are in all your emails as well. Today's agenda, market posture. We did our Friday preview, and my thoughts were, I think it's going to increase a little bit. I could see myself, I thought maybe 575, which would be a half a point increase, which would be nice. That's what we're looking for, right? Is when we knew eventually that the market was going to have a regression of some kind. And the question we asked during those periods is how much regression for how long, then what? I feel like we are full steam ahead, looking for a spring rally, February, March, April, from a cyclical standpoint. Good morning, Sandy. Good to see you. Good morning, Michael. God, we have a phenomenal group today. I love it. Looking forward to perspective from the group today. If you think I scored something wrong or right, if you think you want to throw out some rationale why, some concerns, let's get a great dialogue. And then remember that whatever we create here, we should then be able to replicate in an ongoing fashion in our Discord channel. That's where the alerts will come. We really want that to become a huge resource where you guys can interact outside of guided sessions, but continue the conversations. Right now, we're only using the chat feature. You actually have the ability. I just want to kind of acclimate everyone to it, but you have the ability once we get to a tipping point of participation level where we turn on and your on your cameras and sharing screens with each other. The capacity that Discord provides us as a community is phenomenal. That's why I'm really just like, I'm going to keep pushing for it and keep trying to get things there, because a lot of good stuff in there that we have the ability to leverage as a group. What we do is very like-minded, and the markets we trade allow for that, right? We don't talk about small illiquid issues that 15 people all trading at once could literally have an impact. We talk about things that are super liquid, super, a lot of participation from the institution, so that if everyone's trading the same stuff, we're not impacting it. We're just sort of deciding on rides together. Right? We're at the same amusement park saying, hey, yeah, no, that does look fun. Let's do it at the same time. It makes sense. So yes, I am going to continue to try to pursue and promote that channel. And hats off to Press and Steven, who have already been using it that way and benefiting. Let's get more and more in there. We'll look at the economic calendar. A lot of news next week, actually. So we'll talk about that. A big employment combining with Fed. Lot going on there. We'll talk about the Fed and what we think is going on in that realm of the market sectors. I don't know. I feel like I don't feel like our watch list has any underrepresentation. When we get to sectors, it'll be interesting because there's been a couple of hiccups. Industrials hiccuped, but then was able to recover. Consumer discretionary seems to still be in a hiccup. They can't seem to pull out of it. So it's like, ooh, are we losing a little bit of our breadth? So losing something is fine. The question would be, if industrials is coming back, do we have a good representation of industrials? I've got at least 3 I can think of that are in setup mode right now. So yeah, absolutely. So we'll do some watch list maintenance. Do we need to get rid of anything? Is there anything consumer discretionary that we're like, you know what? I mean, some things I'm going to keep from a sector just to make sure I have some representation of that sector. I did that with industrials when industrials got weak back in September, October. And then as they recovered, we're like, yes, we should be adding more of these, and that's providing those trade opportunities. So we'll make sure the watch list looks good. But if there's one thing I think, and this goes back to, again, late October, when things started to recover, we acted quickly to find and build out our watch list again. And I mean, we did great. The financials that we've been watching have been strong. The industrials have been strong. The communication services have been strong. The technology, we've watched some good things in chips, good things in software. The watch list is a huge part. A lot of times when I work with traders, they get a lot of the trading concepts pretty easily, but what they struggle with is where do I find my trades? How do I, right? And they subscribe to newsletters just because they want someone to kind of give them. And so I feel like that's been a big part of what we do from the very beginning. Is how we posture the market leads us directly to what sectors we search, and then how from there we build out and cultivate that watch list. Watch list needs updating in the oh yes, good call out. I was getting that every week for a minute there, but sometimes my cadences fall off. I appreciate that, Stephen. Watch list update. I make notes as I go to myself here. All right, let's dive into it then. Trading plan section of the week. Can you believe where we are? We are literally moving on to section 5. We're halfway through. We've completed. That's right. I heard Steven's going to be on a extended trip. It won't be with us for a month. You'll be missed, sir. Yeah, so we're halfway through. We're moving on to routines, then into record keeping and analytics, and then setting goals. And that's the first pass at the trading plan. If you're new, you'll be able to catch up, but you can start at any plan, right? If you want to start at your routines, because that's where we are, it's a great place to just dive in. Routines is actually kind of it's harder sometimes to create specific trading rules because you're like, oh, these are my trading rules. These have to be perfect. They don't. I can tell you that. They have to be accurate. There's no such thing as a perfect rule. There's just a rule. There's always going to be some level of like, okay, what exactly do I need to see to pull the trigger? And even as you throw in the concept of anticipating trades, you realize there's gonna be some level of subjectivity in our trading, and that's okay as long as we are consistent when we do that. All right, let's get into it. Posture first. Let me make sure I have everything set up here. I logged out, then logged back in because it always like shows me charts, and then all of a sudden it's like, oh, it's timed out. I'm like, just arbitrarily did that. But we are fresh. The market is. We are connected. If I can get my keyboard to work. Okay, here we go. SPY. Let's get the market posture log. Now, to remind everybody, and then for Elizabeth who's new, the welcome doc, which that will have when I send you an email. All the emails actually have these, but I will send you one directly just to make sure. But the welcome doc is where you'll be able to download the trading plan, download the market posture log, download trade log, like all of our resources, the documents that we use, the links that we use, the links to get into other areas that have, content for you to watch. That's all in the welcome doc. So anything that supports what you're doing is found in that doc, and you'll have the links to that today. There's also links to, and I think I probably should update the posture as well now that I'm thinking about it. I've been trying to keep that one up to date too. But your doc will be blank, but I have a Google Doc that you can go back in time and find all of this, and you can copy and paste it because it is good sometimes. Even though it wasn't necessarily your posture, it's good to go back and be like, this looks a little bit like this market. And then you can go back. So we've gone back and referenced what happened here in October when our posture had dipped, right? And we're like, and you can see even when it was dipping, it dipped from a 1. And so getting a historical record is important. Here we are today, though, on January 28th. No, Stephen, no need to scold me. I did not get a chance to put it into place, but by the time you return, it will be. When are you leaving, by the way? What's the exact date that you're kind of checking out? Let me know. Okay, so, and remember, this is not just for Elizabeth, but for everybody. There is a video for every one of these components. A video for, so if you're ever like, how do I understand long-term trend? There's a video for each one of these that you can go through in detail. There's a video about this entire process that you can watch. There's a lot of support to remind you how do we do things, because we're going to go fast. Okay, starting off, of course, with the long-term trend. Our assessment has been pretty stable. It's bullish, but it's just, pretty good bullish. It could get as high as a 2. We're at a 1. But, this was one where I thought, you know what? I might actually feel comfortable because we're now on the second in a row where we have kind of broken. We made a high, we turned over, and then all of a sudden we just kind of popped it a little more. Popped it. And that's now there wasn't volume necessarily there, but we did have a good volume back here. And on that volume was when we first took out this high. So our first foray into new high territory was this, and it had volume. Now, but at that time we were still scored as a 1, right? But now that we've seen this thing pull back, technically then that's a higher low and moving. I'm a little bit more reluctant to raise the score, but I think at this point, this is done enough for me that I'm going to go ahead and I'm going to knock it up a 1/4 of a point. So at this point here, we haven't done it for a while. It's very significant. And it's interesting because it comes almost immediately after we had a little bit of a drop overall. And that drop came from losing some volume, the VIX being a little bit interesting, but I'm going to go ahead and raise that to a 1.25. So just slightly stronger bullishly in my long-term trend. It's still the same basic trend for now, right? It's still the same basic trend for now, but I do see signs that show the buyers are making an attempt to accelerate this trend. Great. Let's give them that quarter of a point, and then we'll see what comes next. I don't anticipate a change in our long-term score for possibly 8 to 10 weeks from here, because I don't know what it would take if this thing fell from here all the way back down, and it can fall down to this level, and that's above the trend line. That would still indicate, let me draw what I'm showing so you can kind of visualize what I'm thinking. It could fall all the way back down to here, and I would think this seems like this is trying to accelerate, right? That's a 1.5 if it turns into that. Right? That's much stronger. So even if we do see the market go into a consolidation from here, I'm not going to score it down. So anyways, that's that's my thought. That's my long-term score. Let's go to the short-term 6-month daily. Now, last week was 1, 2, 3, 4, 5 days. So when you look at this breakout here, remember we scored that already last week. Did we? I guess maybe we didn't. It's been a 1.75 for quite a little while, actually. Since like December, we gave it a bump around December 3rd, added some strength, and then it's been sitting at about a 1.75. Yeah, there hasn't been. That looks pretty accurate, actually, as I look at what's going on right now. I'm comfortable with that, but I don't see any reason to change it. I mean, it really feels like we're coming somewhere like this. I don't know. That actually feels more like 1.5. But I don't see enough to change it. I'm not going to score it down. I don't see any reason to score it down. I think that what I'm going to be looking for, it's up. Clearly, we're in an uptrend and have been. My thought process would be, if we consolidate now, where does it come down to? Does it come down for 2 or 3 days and then bounce from here? Then I think we are turning into something like this. And that would be a 1.75 or a 2. I would be comfortable putting that like as a 2. So I would actually, if we get this next week, if we have 2 or 3 day pullback and then it bounces above the 480 mark, I would say that would cause me to raise my score next week to a 2. I guess we'll see what this week brings in here and how far the pullback is. Wherever that pullback goes to, that gives us another point relative to this one, right? Does it come down to here? Then we might connect these dots and say, yeah, no, this looks like a 1.5. So this next pullback is going to be very important and helping me to determine what my short-term score should be. For now, I'm going to leave it alone. I feel like 1.75 overall is a good representation. This is out of 3 points, right? Yeah, it's strong. It could definitely get stronger. So I think we've scored it well in that regard. So out of the first 5 points, I've got 3. How's everybody else look? So 3 out of 5, that's pretty good for the foundation of our market right there, right? We feel pretty comfortable remaining bullish when we have a 3 out of a 5 for our trend score. Steven said if the volume had not been low, I would have bumped it, just concerned that buyers are, yeah, I agree. 3.25 Steven says for those first little bits. Let me know if anyone else sees it differently. Okay, volume. Now, volume is an interesting one. Volume is one where I thought to myself, I went from a 0.25 to a minus 0.25 to a 2.25, and I'm like, ugh, you look like a rookie. You look like a rookie. Can't just chasing after it. Oh, it's here, it's there. I feel like maybe I let that one get a little bit away from me. So we'll see what we think now. Let's pull it up. Okay. Yeah, a half a point swing one way, then a half a point the other when it's only a 1 point. I'm like, come on. Was that I'm still thinking it was my fault. Okay. Let's talk about the volume. So we've got 3 above average volume days here. They're definitely where I would consider to be stale at this point, right? Those are stale areas. We've been consistently marking this first one as not enough to give it, like it was down, but it was not down enough. And the only reason is because we had a up day that we didn't count either, and we just sort of let them balance each other. So you could look at that and say, no, that's down. I'm going to give that down, down, down. I'm just being consistent with what I've been characterizing that day as. Definitely negative, definitely negative. Then we have our next set of above average candles, only 2 of them over here. These other ones here, average, 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 or at least not enough above average, but these are definitely buyers. So right now, what do I have? I have 2 for the sellers, 2 for the buyers. And this one is a little bit, now, to be fair, I would sometimes score that even if they were close to each other. But the fact that this one is a little more stale and will drop off next week, and this one's going to stay with us for 2 more weeks, representing the buyers and the strength that they showed, I'm definitely giving it a little bit more weight. Why is that white candle white, even though it's a down day? Because what happened, press, great question. What happened, let me finish this. I'm going to come back so I can erase those lines and isolate that and draw the point a little better. This is at least a 0.25. And if you were scoring it a little bit due to this being stale and this being a little bit more, I would argue you could say it's a 0.5 on the volume right now. I would say it's a 0.5. And I would say that next week, and I actually am going to do this as I look at it, right? Tie goes to the buyers. That's my policy. If it's 2 and 2, I'm gonna have a tendency to lean, unless it was the other way around. If the buyers were stale and the sellers were fresh, I would give it a 0. And then I would give it a 0, realizing that a week from now it's going to go to a -2.5. But I like it to run its course. So I know this one can be a little bit confusing sometimes. Let me know if you have any questions. So I am going to, due to the fact that I have the 2 point, this is for the tie, and this is for the fact that this is fresh. Even though it's a week, a little bit more than a week, it's going to stay with me. So I'm scoring it a 0.5. And then real quickly, let's talk about this candle. So the one that we're talking about is over here in this batch. And it's this white one. And it's like, well, why is that white? Well, remember that we closed at the bottom of the red candle. That's right there. That little line that I drew. Whoops. I hate when I do that. That little line that I drew sticking out, that's the close. The next day, we opened down here. the left hash mark, and then we closed here, the right hash mark. The candle body is based on the relationship between the open and the close. So because we closed ever so slightly more than we opened, that's a hollow candle, a white candle. And we think we have a natural tendency to correlate open candles with bullish because that's typically what you see. But there are some times like this where it's a white candle, but it's a down day. And the reason it's a down day is because we closed here relative to the previous close here, and it was lower, right? We dropped from yesterday's close to today's close, we dropped. From today's open to today's close, we went up just a little teeny bit. So the buyers did come back a little bit, but overall, the sellers still pushed it down from the prior day. And then the next day, they pushed it down again. And the next day, they pushed it down again. That is what they call a doji, right? The doji is simply the fact that we have small body and we have a shadow, like a spinning top. So this is a doji here. Now, this one isn't a full doji. This would be considered a dragonfly doji, which means it has a longer bottom and a shorter top. And I'm calling it dragonfly because I see that as a bottom. If I saw that same candle up here, I consider it a tombstone doji. I know there's a lot in candlesticks. It's like, what? So a hammer and a hanging man, same thing. A dragonfly doji going up and a tombstone doji. This one's tough because it has just a teeny little bit of a shadow there. Normally a tombstone doji has just a little bit more. The reason it's down is because it gapped down at the open. Correct. The futures were down. There was the selling pressure was in the morning, overnight, and then it just sort of stayed down there. So hopefully that makes sense. Okay, let's go back to posture. And let's put volume to 0.5. Look at that. Look at that. Let's go to major market analysis now. Major market analysis. What has our thought been? What's our concern been? We lost a little ground because some of the momentum that we had gained by the NASDAQ, or no, sorry, by the Russell, by small caps. We lost some of that enthusiasm as the market and investors have increasingly realized that they got a little bit ahead of themselves with the expectations of Fed dovishness, accommodation, i.e. lowering interest rates somewhat aggressively. I told you I read something from UBS that said they're looking for 2.75 drop. 2 points. They only meet 8 times. There's only 8 meetings. If they knock it a quarter of a point every meeting, that's 2%. So that tells you how much they would have to cut it to get it down 2.75. I'm thinking that's madness. But even as we've adjusted to maybe more realistic expectations from the Fed, the market hasn't really done much for pullback. And what we're hoping to see is some resilience now from the small caps that say it's not as aggressive as we thought, but it's still going to happen. And then we see that bullishness come back into that segment of the market. Okay, so that's our context here. When we look at 200 days, you can see it gives us from here, we're kind of starting with that late spring, early summer rally, which was a little bit outside of the norm for the cyclical. Normally May and June are sideways, and we had quite bullish May, June, and into July. And then we had August, and then it kind of tried in August to figure it out, and then it fell, and we just sort of eased up until we got to the this October November shift. We moved pretty quickly. You know, I would say that we pretty quickly recognized by about right in here. That was our first nice step into things. We had the lower high. We had a lot of things that we look for breaking out of these consolidations. And we had great November, December, even into January. right? So what's the market's been doing during this representation? We have the NASDAQ up here. We have the S&P in the middle, and we have the Dow and the Russell kind of in a lockstep at the bottom. So that's right now, the Dow and the Russell are the ones that we're kind of curious. The Dow has shown some bullish resilience. So it's bullish in a way that looks bullish, not defensive, right? It's not that the Dow is moving and the NASDAQ is not. The NASDAQ clearly has moved back into a leading position. We drop this down to 133 days. That's what I mean. Look at the Dow. At 133, the Dow. Now, this is still representative of some defensiveness because 133 basically comes in right at the tail end, right at the start. So if you were to come into the market right in July, you just missed a great bull run, you catch this downturn. Well, in the downturn, the Dow was the strongest. It held up the best. That's the defensiveness that we talk about. You can see how clear that is, and you can see how the Russell was the weakest. But in this reversal, you can see how much the small caps have tried to come back in, and this has stayed strong. I don't see this as being representative of any kind of a shift. It all makes sense still with our narrative. Let's jump to the 66th day. Now on the 66th day, actually things look pretty good. The NASDAQ is in a leading position. The Russell is in a leading position. We had some concerns. The concerns were through here, because you can see that we got a little overexcited about those small caps. And then they had quite the retracement here. So small caps retraced at such a much higher rate from late December until about the middle of January. The small caps were feeling it. This is where we made the adjustment. Let me delete and start over again. This is where we made that, I think we've overexpected the Fed. That's where it came. It didn't really impact the rest of the market more than just like a little bit of sideways consolidation. That to me, and the fact that we still have accommodative expectations of the Fed, everything's lined up. Let's make sure that we understand what kind of market this is. Now, for me, this actually gives me, I believe, some ability to rescore that quarter of a point back in. That we took it away back here in January, right? January 7th to January 14th. So when you look at this point, January 7th, so here, right in this area here, we were hopeful and it just couldn't. It just took another dip. And so when it took that other dip, we said, we've got to take that away, right? But now it's moved back up and it's now lockstep. I see it maintaining a leader position. So I am going to go ahead and put that back in. I'm going to go 0.75. Okay. All right. Well, this is actually a little more bullish than I thought. I've gotten a quarter of a point here. I've got a quarter of a point here. I don't expect sector rotation to do much. Let's finish this. Let me know if you see it differently. Do you feel like I'm getting a little bit ahead of myself? Or do you feel like, yeah, that makes sense? Let's go to the 22-day. I love hearing from you guys. The 22 is a little less convincing, right? The 22 is a little less convincing. The Russell is showing some weakness here, but remember, I don't score the 22. I score the 66. The 22, if I was uncertain, if I was like, I don't know, I would come here and be like, no, I'm not going to score it up. But I wasn't. I felt like this on the 66th day, and what we had seen prior had given enough credence to the small caps that I want to give them the credit. I wasn't uncertain. I felt good enough about the score. Here I think, it better continue to recover. The small caps, if we get a bullish window this week, which is what I'm looking for, the small caps better have a nice participation. And that -4 better close the gap. And then we'll look at this and be like, yeah, okay, we're okay now. Make sense? Let me know if you have any questions. I know this is another one that I think that sometimes can seem inconsistent. I hope it's I believe it's consistent, but sometimes when you look at the logic, you might think, oh, did you apply it the same way? And yeah, there could be a time. Why not the 22-day? I don't believe there's enough information there that it's representative of, you know, driving information. It's supporting information. 66 days is enough for me to say, yes, that's representative of institutions. And if I'm unclear, then I can go to the supporting information and say, oh, okay, that either supports it or says, nope. Big picture stuff for us. That's exactly right, Sandy. Okay, let's move on to sectors. What's the sector concern? I'll tell you this, it's not communication services and it's not technology. Those have reemerged significantly, clearly. The concern has been in consumer discretionary and in industrial, right? These are strong. So here you can see discretionary, and that's what I mean. These are shooting higher, and this is pulling back still. Financials moving higher. Industrials moving higher. So what's at the lead here? I mean, you can see from this perspective, tech, communication services, consumer discretionary, financials, and industrials. Those are our five. Those five being in a leading position is what had our sector rotation at a 1, perfect score for a while. But then last week, we dropped it. We dropped it. Why? Well, because you can't give it a perfect score if discretionaries moving like this. That's not full breadth. That's not perfect. It's just not. If we still have 4 of 5 sectors, we're still a 0.75. That's still quite broad. I still feel good about that, but it's not full breadth, right? Then you look down here and you see there's our healthcare that had a little surge. There's materials. Here's defensive staples down here. Well, there they are. And here's energy down here. You can see energy really down at the bottom. As inflation has become increasingly less part of the discussion, so has energy, you'll see. But we do keep an eye on it. Then you see down here is utilities. These are our defensives. These are our growth. Now, this is only one perspective, of course. So what do? We start to zoom in. Let's go to 133. And you can see there was still some inflationary concerns back here in the summer. And as that eased, that sort of opened the market in November and December to make its move. Yes. Okay, so what do we have? Communication services, tech at the top, financials just a step behind. Healthcare, you tricky bastard. You tricked me into putting you on. I took a trade and I didn't go well. You can see what's happening with healthcare. Healthcare back here was like, hey, we want to run with the big dogs. And then all of a sudden it starts just like, we can't keep up. We can't keep up. I don't know about all that. Industrials still in the mix. Now here we do think, energy. Is energy trying to make a move? Now I saw this before. And it was like, I don't know. I actually energy threw a tricky one. I got out of that one with a break even, but it failed to launch. So we'll keep an eye on it. We'll keep an eye. Materials is down here. There's discretionary. You can see why what's our interest in discretionary right now? In fact, a trade for Home Depot came across and I was like, the concern is the sector, right? The concern is the sector. And there's more concern here than there is even, I would say, with Costco and Walmart coming out of consumer staples. I would say right now, consumer staples is holding up better. I'm on the fence with Home Depot. I'll have to decide where I'm at. So there's discretionary down here. There's utilities down here. Let's go to 66 days. I got to start speed this up. I'm yapping too much today. 66 days. This is what we're scoring. Tech strong. Financial strong. There's the market. Then in here we have industrials and communication services. Those are our four. Those fell just a titch below, but they're still in a leading position and they're leading in other areas. Here is discretionary. I would love if it could come back. We need it to come back to get the one, but there's no concerns here, really. Here's energy now. Doesn't look quite so. Oh, no, it's not. Sorry. There we go. Energy's still down on this perspective. Utilities down, staples down, healthcare's down. Yeah, okay. I don't see anything changing here. Let's see if anything stands out for our look ahead on the 22-day. Yeah, you can see healthcare's kind of hanging out there. Staples is there. Discretionary is there. So this tells me I'm more inclined to trade Costco than I am to trade Home Depot right off the bat, right? That's that. It doesn't score it differently, but it does give me that information. So let's real quickly go put that in place. That stays the same down to the VIX. Let's get the VIX going here. VIX. Okay, so the VIX technically made a higher low. So this low was down to 12.35. And this low was 12.41. Literally 6 cents. It's 6 cents, but it is 6 cents. So from a technical, like a computer's looking at it, the computer's like, that's a higher low. Visually, it looks a little bit like a higher low because these bodies are above these bodies. When we do the low, we looked at shadow and shadow, and it was this long shadow here. I mean, that's a tough one. If you said I'm going to consider that a same low, I'd be like, okay, that's understandable. If you consider that a high low, I'd say, okay, that's understandable. We don't have a lower high yet because it hasn't rolled over. It's gone up and it's turned, but for me, it has to cross the body. So it's setting up for a lower high, which would immediately have me thinking this is coming down. So if tomorrow we have a bullish day, I'm thinking, yeah, okay. If tomorrow we have a somewhat bearish or sideways day and we see it just sitting in here, I'm waiting to see if it does roll over. That's a great signal. That will raise my score to a 1.25. If we take out this low, that'll raise my score. So that will get me 1.25. And that will get me to a 1.5 again. So if it gets down into this, right back down below this level, 1.5. That would, I could raise my score another half a point next week just from the VIX alone, but I'm not going to raise it now. I'm not going to lower it or raise it now. I'm going to leave it the way it is. So we still have just a little bit of concern that this thing has had this escalation feel. I'm hopeful that what we see this week then indicates de-escalation as that comes back down. We'll see. I'm going to leave the score alone. It's a 1. I'm back to a 6. Oh, look at that. Love it. Love to be in the 6 territory. Beautiful things happen. Remember back here in December, we made a great jump. We had already been pretty bullish, right? We had, back in early November, we started raising our score. By December 10th, we were full steam ahead. That's where we are now, full steam ahead. I'm looking for a bullish window. I'm feeling pretty good about what I see. Let me know if you agree, disagree, questions, comments, or concerns. Where did everybody else end up? I know Press put his, or no, not Press. Stephen put his in the chat. Stephen said he is a 6. We are a tie. Stephen and I are seeing it very similarly. Bob 6.25. Yeah, give me your final score. I'm curious how close we all are. And then let's go real quick. I want to take a peek at the week ahead. What do we have on the calendar? Nothing tomorrow. And then it kicks into gear. I'm not seeing everyone's numbers. Give me your numbers. I want your numbers. Demand them. Tuesday, consumer confidence. Expecting it, presses a 6 as well. Expecting it to go up to 115. I mean, that's very good. Okay. Press is 6. Sandy's a 6. Paul's a 6. Michael's 575. We're in a good range, you guys. Perry agrees. Love it. Okay, so expecting consumer confidence to increase, that matches exactly what we're seeing in the market. Job openings expected to come in at 8.8 million. That one could drop a little. Would be okay. We'll see what it does. It could drop a little bit. ADP private payrolls coming out on Wednesday. Last time they expected less and then reported 164. So there's been several times where they're like, oh, we think it may drop a little bit, and then they report. At some point, we may see a negative surprise. We have not seen a single, knock on wood, a single negative surprise in the employment. It's just been all positive. It's been like, oh crap, they had way more jobs than they thought. So expecting 140 to 160, that's maintenance. It's not like, hey, we have a growing labor market, but that's a maintaining labor market. That's enough that unemployment stays at the number that it's at. It would be essentially the expectation, or very close to it. We maintain a low unemployment environment. So that's on Tuesday or on Wednesday, private payrolls. And Fed. Don't forget that. So in the morning, they announced the ADP, and then in the afternoon, they announced the interest rate decision. What is the expectation for the January 31st report? A 97% chance unchanged. That's what we've been thinking the entire time, right? No change. It's this March 20th meeting, right, that has fluctuated. At one point recently, it got to 1.5 to 1 that it stays. Right now, we're getting very close to even odds. 50-50 that they cut it or they leave it in March. I like that. I think we could live with that. We can have a great bullish market in that. And then if we got some supporting information from inflationary reports between now and March, I think we would start to see it tilt. And then we may go ahead and see that first rate cut in March. I can tell you right now that would absolutely rally the market for March and April. And then maybe it starts to slow down and we'll see from there. But that's what we're seeing for March. If we go to May, it's now, there's only a 12% chance that it's uncut. There's a huge chance that it's at least 25 and a pretty good chance. There's a better chance that we're a half a point down than nothing at all, right? 3 to 1 in that, in fact, in that regard. So that's what we're seeing from the Fed. Thursday, standard jobless claims. It's still just sitting in a beautiful place down in those low 200s. Remember, for me, that I would need to see 3 weeks in a row above 250, like we would need to see the 3-week average get to like 270, 275. And then I'd be like, okay, there's some concern in the labor market starting to develop. That would be early indications. I think we would see that happen before we would see a negative, but you never know, a negative payroll report. So you can see Friday, we have non-farm payrolls. Last time they expected it to drop to about 140. They reported 216. This time they're thinking it'll drop, but only to 180. 180 is growing. 150-ish is maintaining. So 180 is still like, hey, that's pretty positive. Although they say it may raise a tick here. It may raise a tick here on the unemployment from 3.7 to 3.8. Another consumer sentiment coming in. That's a good call out, Bob. He said there's potentially a big drop in productivity in Q4. A 5.2 to 2.1. Yeah, that would be interesting to explore as that number comes out. Maybe we'll take a look at that. That's what's coming in front of us. Let's get to the watch list now. get to the watch list. I may have to go over a few minutes as usual. As expected. Let me move the watch list over here. Open this up. Get to the start. AI, or excuse me, Agilent, healthcare. I'm actually just gonna go ahead and ping this one off. I don't love the way that it's looking all of a sudden. If healthcare convinces us to come back on, then we'll say maybe. Apple. Apple's consolidating in a flag-like pattern. This earnings report is on February 1st after market. That is Thursday. So if your trading rule is to be out by earnings, there's maybe not time. I'm going to still put this on my list because that is a setup, but it's gonna run into earnings, and that's going to make it hard to trade. AIG made a move up. I would say it's getting ready to pull back, but it hasn't started the pullback just yet. Looks like it could still squeeze one more trade in before earnings. So we'll see what happens there. AMD is kind of in the same boat as Apple. We've got some tech earnings coming out this week. I mean, it looks like it's trying to set up, but I just don't think things are going to develop in time. Amgen, I like Amgen better. I'm going to leave Amgen, even though I did take this and I did stop out for a very small loss here. You might have squozen a gain if you had worked it. I didn't feel great about how I executed, but I broke even. Basic was a break even, small loss, break even. It still looks okay. I'll leave one as a representation, but it doesn't look tradable. Amazon looks a little overextended. Isn't there a spread that makes money whether it goes that makes money around earnings, or makes money whether it goes up or down? Why not do that around earnings? There is an option strategy called straddles and strangles. Straddles is the same contract, usually the same strike, and then strangles is where you offset them. A lot of times for like this strategy, people will do like an out of the money strangle. They buy an out of the money call and an out of the money put. Whereas a straddle would be at the money call, at the money put. It's going to be more expensive. Now, the problem is that around earnings, we see something like this, where the volatility has been inflating. So right here, the day before, if you're like, all right, I'm going to buy a call and buy a put, you're buying a very expensive call and a very expensive put. And the next day, the volatility doesn't slowly come down. The next day it opens here. So the volatility went from 51 to 36. That volatility hurts both the call and the put significantly. In fact, I've done that trade, and I've had times where in this case, the next day when it gapped up, the put's worthless. And you might think, oh, but it went up, so now the call's making money. I've had times where the stock went up $3-4 and the call still lost half of its value because the amount that the implied volatility drop overwhelmed, even though it was $3 or $4, right? If they think, oh, we're buying it as if it's going to go up 8 and it only goes up 4, the next day those calls are going to drop because expectations did not get met by reality. So yes, it can be a day, it can work great sometimes. But if there's a day where, let's say it doesn't move at all, the volatility drops, time elapses for a day, and then I mean it can be pretty bad. So I would say be careful with those if you see people talking about those. At its most basic level, how does implied volatility impact the price? So directly, implied volatility is higher, options are more expensive. That's the implied volatility formula is literally based off of current prices relative to historical prices. If you ever would go look at there's a white paper produced by the CBOE, Chicago Board of Options, about the volatility index, the VIX. And that's the gold standard. That's what they try to apply. They're using a very similar formula to the VIX to calculate implied volatility for individual options. It's all the same thing. They're looking at in the money, at the money, out of the money over the last several months to establish what's normal. And then they look at where prices are now. And that way they can see where are we relative. And so If you look at the implied volatility here, down here, the options got real cheap. Expensive, cheap. Not cheap. It's not the most expensive, but pretty expensive. So it's a direct correlation. AXP. We love AXP. I traded AXP from here to here. And then they reported earnings. And you're probably like, oh, Scott, do you wish you stayed in? Well, God, yes, of course. Just like I wish I bought the winning lottery numbers after they come out. But I had to decide before, and I didn't want to put the gain I had at risk. Did I think I could hold one and then I chose not to? Yes. Oh, good times. Good times. BA, nothing there yet, although Michael said that they are United is flowing Boeing planes again, he said. Be that what it is. Nothing there for the stock yet. BK, nothing really there. Stuck to my plan, Sandy. You're right. Am I considering giving myself a little bit of leeway in a strong bull market to hold a contract? I am. I'm like, yeah, you know what? In a market where a good number of the things that I'm watching, I'm picking strong things are actually showing positive responses. Okay, I'm going to open that door a little bit. Yeah, just stick a toe in. That's all, just a toe. BLDR, I would say BLDR looks pretty good. The sellers took a run at it. They didn't do much. This thing's knocking. Industrials is where this is. So do we think there could be more in industrials? Yes, we do. BLK, actually, I think BLK looks like it could. It's meandering a little bit, but at the same time, it's staying above the 50. And anytime we get a solid bounce signal, right, where we have the stochastics looking to turn, the candles turning above the 50, that's a reasonable time to try to take a trade. So I put that on the list. And you could actually see that was an indication of that. This one here feels a little overbought just after earnings. I want to wait and see what happens. Citigroup is one that I took, and I actually closed all but a little bit. So I have a little bit more of this left to see how it does on Monday. But it is starting to look overbought, starting to hit some resistance, right? But definitely gave us that nice little signal coming. Not looking tradable now for something new. Caterpillar, overextended. That is not an industrial that I think looks ready to go. Capital One looks a lot like AXP, got an earnings acceleration. Okay, let's wait and see what happens next. COP, a little bit of short-term momentum, but not enough to reverse its trend by any stretch. Costco on the list, ready to go. Ready to go. Possibly was traded on Friday. The stochastics pinched. You have a bullish candle. That was feasible. I got out of most on Friday, Bob. I kept just a little bit open. And Costco looks good. Anybody in it thinking about it? Let me know. CrowdStrike on the list. CrowdStrike, software, technology. The trend looks great. Anytime we have a chance to get in when the sellers fail to push it down, they're trying right now. When they're done trying, I'm okay if it gets through here. I'm good all the way back to here. That wasn't enough to be overly concerning to me. So if we come down and we get to this level, great. Through it, fine. Wherever this comes down and turns, I'm interested. Crowd is on my list. CSX, nope. Got an earnings acceleration. Not much you can do with that. DAL, not yet. Maybe. It got back above the 50. Let's look at Costco in the morning. Bob, remind me. Some analysis for a Costco trade in the morning. That's tradable for sure. DHI, it's a little too much. It's kind of at the 50, but a little below. I would say you could make the argument, but I'm not going to. DIA looks a bit overextended, but we'll see. Elanco, that was viable. I know a few people took it. I don't know if anyone stayed with it. It made a nice little bounce off the 50. Looks like it's ready to continue going. Let me know. Fastenal, looking tradable soon. New high. The sellers have the floor. What does their volume tell us? Not one day above average. Not one day above average. So as this comes down, I would be fine with it coming all the way back to 66, but it doesn't look like it's going to get that far. Fastenal, industrial, looks great. GE, nothing for me there. Gold, no. Google, I love it. I love it. I missed this one. It just sort of popped out of this flag. I caught Meta, but not Google. Now what? You've got earnings. So we've got this week, we've got Apple, we've got AMD, we've got Google, I believe Meta's. We got a lot of tech earnings coming up this week. So I don't think there's anything we can do but watch to see what happens going in front of that. Goldman, I don't think so. Looks very sideways. I'm getting ready to bounce it from the list. Doesn't look very tradable. I'd rather wait for it to break out and then catch the next pullback. I'm going to pull it. Let's see if it shows up again later. Home Depot. So Home Depot, it was Friday, it gave a signal for sure, right? Friday, it gave a signal. You had to decide. You could still look to see and say, hey, you know what? I'm going to wait and get a Heiken Ashi candle. So you could say, I'm going to get confirmation on Monday. That's still viable. We'll talk about this one on Monday as well. The hesitation would be consumer discretionary is a bit of a struggle. But one, could I take one? Yes, for sure. Absolutely. IBM had an earnings acceleration. Just got to wait to see how that plays out. ICE, I don't see ICE doing very much. I'm getting ready to pull it from the list too. Maybe we run some searches soon to see what looks good. Intel got smashed on earnings. I went through the trouble of putting some fibs on here at one time. I kind of feel like I want to watch it for a little longer. Let's just see. IWM. Okay, so IWM, what do we need to see here? So there's where it was consolidating and things were getting a little nasty. And then all of a sudden we popped out of it. We popped out of it and we got a little volume help. That was nice. So now what? Now, if there's a pullback, I'm hoping it doesn't get below this 50-day moving average. If it can hold above that 50, then a couple of things happen. Number one, the trend held up. Number two, the consolidation held up, giving us a higher low. That would be very strong. That would really help to cement the posture that we have and not see the major market score deteriorate. And it is a little bit of a smiley face, right? That's a smiley face. That means bull market for sure. If you've never seen that analysis before, I don't know. It's probably good. All right. JP Morgan looks all right. It doesn't look tradable, but bullish. Meta earnings this week. This was a nice catch coming out of this bull flag right here. And it's just sort of meandered on higher. I kept one small piece of that one as well. Citi and Meta, the only two I kept a little bit of. And then we got earnings, so not much to do with that one going forward. Microsoft, same thing. Earnings this week. Oh, add it to the list. Add it to the list. Meta, Google, Apple, AMD, Microsoft. A lot of tech earnings this week to go with employment data and Fed information. Netflix crushed it. Continuing to push higher. NVIDIA looks tradable soon, possibly. Let's put that on the list. Put it on the list. PACCAR, possibly rolling over. Where's PACCAR? Industrials. Tech will be hard this week with all those earnings. Let's just put it out there. CrowdStrike is CrowdStrike's on the list and not having earnings, but a good percent have had big hikes after earnings. Agree. With all the tech earnings this week, could we see sympathy movement in other tech names? 100% we will, Press. That's why I said, yeah, 100%. we've got to be aware of tech being pushed by other earnings, big seven earnings. Absolutely, 100%. Picard looks like it could reasonably pull back for a trade. PNC kind of failed to launch in the financials, but we'll give them some time. Tech's been rolling over a little anyways. So if we see a little bit of a tech pullback, that's fine. And that matches what we tend to see for a cyclical in the end of January. RCL, I'm kind of tired of watching RCL. Consumer discretionary, I'm bouncing it from my list. SMCI, earnings, put it in the list of earnings. Okay, SPY, again, looks like we could have a consolidation. UNP is consolidating after earnings. I actually think UNP looks like if it makes a higher low, could still be tradable. If it holds the 50, I'd be interested. I'm going to consider it. Here's the VIX. Yeah, Monday and Tuesday could be very interesting days. Very interesting days. Waste Management's a new one that I put on. I don't really see the consolidation yet, but that's industrial. Walmart, consumer staples. I like Costco better. Here's just a quick sum up with the sectors. Biotech and healthcare are looking iffy. Materials looking iffy. Communication services look strong but overextended. Energy, a little bit of short-term momentum, but not enough for us to really pay too much attention yet. Financials looks strong but a little overextended. Industrials regained its strength but looks a little overextended. Technology starting to pull back. It's like a weather forecast, right? But that's what we're doing, right? We're forecast. What's overextended? What pulls back? 2-3 days of pullback could really do a lot of good for us this early next week, as long as it's not with too much. Staples are sideways. Utilities are down. Consumer discretionary, iffy. Okay. Lastly, that's what we're looking for. We'll look at some trades tomorrow. Trading plan. We are on section 5. Seems like a short one. This should be the easiest one to define. What do you need to do? You need to carve your times. You carve an hour and change for us. Plus, you probably should do a little bit more work before or after. Make sure your log is up to date. Make sure all your trades are organized and ready to go. Where your stops, your targets, reward to risk. What do you have open? What are you expecting? Make sure your short list of potential trades is ready to go for Monday, right? These are the things, your routines that you want to draft it up. What do you do? When, how long, and what? Sunday for me goes from about 8:30 to about 10:30. I do a little bit of work before. I do this work with us, and then I finish some work after. That's my 2-hour weekend routine. Sunday mornings is mine. Make sure my watch list is ready to go. Make sure all my trades are organized, etc. Right? I don't have a Saturday. I don't do anything on Saturday. Then I have 3 routines, possibly 4. I have a couple of different during market hours. Before market open, the half hour before, we do the 15 minutes of it together when we meet on Mondays and Wednesdays. What am I looking at? I'm looking at the futures. I'm looking at the news. I'm looking at how things look to open relative to the trades I have on and any stops that are going to be in jeopardy. Right? I'm just making sure everything's organized for the day. During the market, I watch I don't watch it. I check on the opening range. I do a mid-morning check-in and I trade the last hour of the day. So I have routines for each of those. In the evening, I have a routine for how do I process it? How do I do record keeping? How do I prepare for the next day? The more organized you are, the more efficient you are, right? You can do this an hour a day, 2 on the weekend, and be a very effective trader. Anything above that is just learning new things, testing new things, but your execution should be hour and a half a day. If you're day trading, obviously that changes things. And if you decide to watch it more, certainly you can make that, but minimum requirements, trading can be done in 6 to 8 hours a week, 10 at most. No problem. Bob says, I highly recommend doing the entry as soon as the trade is filled, right? I love that. I love that. Log it as soon as it fills, you log it. It's just a great habit. We are what we repeatedly do. Excellence, therefore, is a habit. That's your mindset for this routine section, right? That's it. Don't never miss a step because you didn't bother to write it down or work to habituate this process. You want to do it the same way every day. I don't come in and change it up like today I'll do it a little differently. No, right? Just like the surgeon comes in, they do it this, they prep, clean, wash, scrub, prepare, make sure everything's there. That's all done in advance. That prep, you don't want to be thinking that you come in and they're like, all right, you know what? Let's change it up today. You're like, what? No, don't change it up. Having a lot of success day trading the SPX. Okay. Interesting. I mean, that's great. If you're day trading successfully with the VIX at 14, 15, you would love it in the 30s. I mean, it can move. So, all right. So that's what you're working on. If you have some routines, but they aren't defined the way they could or should be, work on that. I'll see you guys in the morning. We'll meet tomorrow, 15 minutes before the market opens. And then routine is as usual. It's great to see everybody. Enjoy the rest of your Sunday. I hope it's relaxing. And I'll see you tomorrow. As always, happy trading.